Welcome to Dalrymple Trading. My name's Nandis. Today is 1st of October 2025, the start of a brand new month. We're here to look at the S&P 500, WTI Crude Oil, and of course, gold. So just looking at the S&P 500 pre-market hours, you can see we have sort of pulled back from this double top here at 66.84. We're pulling back with the view to obviously retest all times a high at 6,700. Now, it is looking a bit weak. We haven't seen that sort of straight bullish momentum to the upside just to break that target. So we're seeing a bit of weakness here. And I mentioned in yesterday's video the current geopolitical situation in Washington with the Congress not being able to come up with a proper budget. So that shutdown is imminent at the moment. So unless the Republicans and the Democrats work something out, that shutdown will impact the US economy. Therefore, that'll give the market a bit of jitters, obviously, that we're seeing that weakening price action coming through whilst that all pans out. So we may see a little bit more downside before we push up higher. Look, I do think eventually they will sort it out. It always gets sorted out. The question is, how long will they debate and how long will they play games until they win out and they come to a consensus to move forward. So that's where we're sitting. But at the moment, again, our position hasn't changed with the S&P. It is still bullish. As long as we take trades here that have the right risk to reward and we buy at a discount, it should reward us handsomely. Keeping in mind, though, that this market is definitely in a bubble. So we just have to make sure that we're conscious that down the road, this thing can adjust very significantly. But as of yet, we don't see those signs. So we just continue to trade the price action as we see it. Looking at WTI crude oil, what we saw is further continuation to the downside. However, in the main session yesterday, the bulls did attempt to push prices higher. I believe they had about 3 successful attempts to push prices higher, but as we can see on the current chart pre-market, it hasn't been greatly successful. The other thing to keep in mind is we have that downside target of 61.50, which has been tested previously in the last couple of weeks here. Multiple shots back in 6th of September, 12th of September, 22nd of September, and we're just only a hairline away from that, testing that range there. Keeping in mind, of course, we do have another further downside target of 60. Right, so this thing is very stubborn that it's not breaking past 61.50 and going down. So the question is, will we break 61.50 and go down, or will we sort of push back higher? At the moment, crude oil has just been a little bit sideways, to be honest. I mean, yes, the trend has generally been to the downside in the last couple of months, and it's at historic lows. From that macroeconomic perspective, it's at historic lows. So some possible trigger at some point will push this thing higher. Some supply-driven demand issues, things of that, which we can't forecast, right? They sort of come out of the blue, and that'll obviously push prices higher. But at the moment, it's weakening of the crude oil market at the moment. And like I mentioned in yesterday's report, OPEC has announced further supplies. So that's obviously weakening demand as well. So moving across to gold, what we're seeing is obviously upward price action in this bullish market. We just retested all-time highs there at 388. And then obviously the question now is, are we going to see a retracement back before we push higher? Similar to the S&P 500, gold has been on a very, very strong bull run. It'll be silly to short this market. In fact, any correction is to be bought unless otherwise proven. Okay. So just looking at some market stats, which I thought I'll add into our daily analysis. So a couple of things to call out here. So we can see that the Chicago Business Barometer it was forecast at 43.8. It came in at 40.6. So it's a little bit weaker than what was forecast. But more importantly is the consumer confidence index. It was forecast at 96, came in at 94. It's not a huge difference between what's been forecast. But basically this weakening of figures, what that tells us is that a future rate cut is more likely come December 2025. What that translates to is more upside for the S&P 500. So despite the market being severely overvalued, it continues to just move to the upside, right? So it is something to be wary of as a long-term investor in terms of, are you going to put all your money into the S&P 500, or is it better to take some off and put it to other assets that can obviously withstand any correction that might come? Because the S&P is very, very stretched at this point in time, and these weakening numbers in the US economy only point to further rate cuts, which adds more fuel to the fire when it comes to the S&P 500. So that's all my analysis for today. I'll keep you guys updated tomorrow.